Good afternoon. This Thursday, August the 13th. Well, the grain trade and the cattle trade. We'll get to cattle later. We'll do the grains first. A lot of moving pieces today, creating volatility, especially in the wheat. But we'll start with the corn. Corn, big solid day yesterday as the yields were reduced, acreage increased, demand increased. And we had a carryout coming down about the 1.65 billion bushel number, and we still think it's going to keep going even lower as we get into the fall. It's just taking the trade a while to figure that out. But you pretty much knew the grain trade was going to try to do a retreat today, that corn would do something to pull it back towards that 470 range. And they used farmer selling with all the grain terminals getting bids out there on the phones for everybody to see. And hey, you got an opportunity for you to sell. Well, it was also the CONAB numbers that came out this morning that pretty much got things going after the trade got underway. Let me show you what they did. So the Brazilian CONAB number out, they increased from last month a 1.2 million metric ton, which really isn't a major thing. It's a 100 million bushel increase on their crop size. Of course, the trade was saying, well, gee whiz, that'll offset the 75 million bushels of increased demand that the USDA put in to old crop this year. But here's the thing. Okay, so they increased it by 100 million bushels. We'll talk in that terms rather than 1.2 million metric tons. They pretty much laid all of it into their ending stocks. They kept some for domestic because notice exports didn't grow any, correct? And what they're doing is they're trying to build their carryout. They too, like us. So if you look at their corn production at 142.96 million bushels, if you move the decimal point over to reflect the 14.29, that's 10%, right? Well, their current ending stocks is about 12%. And so they're as tight, almost as tight as us. They're trying to go from a 10% stocks. Think about that. That's where it was last month, right? 10%. Now they're increasing. They're not going to sell this off. They want to build their stocks as they had gotten extremely tight the year before. Yet the grain trade runs around like all this grain extra is going to come up for sale. It's not. It's going towards building their ending stocks. And for that matter, they have 661 million bushels. We went from 2 billion that we thought was great now to 1.65 billion, and we're starting to get nervous. They're 661 million, and that's just above 12%. So they're not selling this grain, but tell that to the grain trade who want to knock the market down. They had to find a reason. So off we came from yesterday's big movement. We've been holding this 50% retracement, giving us what now looks like a wave 2 on our way to a wave 3 that we can find measurements to 520, if not higher, depending on how the fall evolves. And we get China buying corn, which is not in our balance sheets. Take it to the corn chart on the 60-minute that we use. It's a 219-day moving average. I can't get that to pop up there for you, or 19-period moving average. And you can see how it kind of goes with the flow. Well, it's turning up. So yes, we could still go back down to 467.5, maybe, which is near the 100-day moving average before we do a bounce. But we think corn will improve. And what happens over the weekend if things in the Black Sea don't go so right? But our count this is wave 1 up, a wave 2 pullback, going back to 467, maybe and a half, and then on our way to re-challenging that 492, 495 range before possibly getting a fourth wave. And then after a fourth wave, we push on up into the fifth wave. Now, this time could take us well into September, if not October, to achieve this. But with President Xi on his way in September, it just wouldn't be a surprise if we see some corn buying before he arrives. And that is not on the balance sheets for China buying U.S. corn. Soybeans, encouraging. Note that the action on the 100-day moving average, 1 day below it, we continue, except for that 1 day, to hold the 62% retracement of the June low and the July high. And look at how we just kind of saucer back up. Nobody's talking about it. We get some strength starting to develop in here. You throw it on the continuation chart, it matches this mapping we've had since July, stalling out at that 1240 range, pulling back, just like the November beans, anchoring in at the 62% retracement, but not going to the 200-day, nor the trend line. Why not? Why is money picking up the September beans right here? And in about another week or two, November is going to come on this chart, and we have the prospects of doing a wave 3 rally. Now you might ask, how in the world is this going to happen? Well, I can give you a couple ideas. One, China stepping up their bean buying ahead of President Xi visiting here later in the month, giving the illusion that they will take 25 million metric tons when the trade is pretty much convinced they're going to be lucky if they take 15 million metric tons of that. Okay, there's that. And then there is, have you heard of the Super El Nino? Yeah, well, Mato Grosso, the largest soybean producing state in Brazil, they would like to start planting their crop around September 1st or any time in the month of September. But it is bone dry down there right now, which it is typically in July and August. And usually they start getting some rains in August, but there's no rains occurring. And so they'll wait out September and wait until October 1st, and then they have to go plant in the dust that because monsoonal rains of something, when they normally get 10 to 14 inches of rain, they'll at least get 6 inches. They got to get those beans in because then it messes up the safrinha corn crop. They have to start planting towards the latter part of February. So it has to go in at this marker. And if it's going to go in dry, this could be why we're seeing a wave 3 pump. And maybe the Super El Nino, the largest in 50 years, might mess up Mato Grosso and on further south into Brazil. It normally affects the state of Mato Grosso and maybe down into Mato Grosso do Sul. So this is a maybe of why maybe they're holding these beans up. And this is the September bean contract closing pretty decent today. A close much better tomorrow implies beans just want to have fun, in reference to Cyndi Lauper, right? Okay, wheat. This crazy show pushing new August highs here early in the session, and then around 9:30, boom, wheat drops 20 cents in about 3 minutes. Conveniently, because this guy over in Ukraine, he's asking for Russia to halt attacks on civilian targets. This is the guy who said, I'd like a peace deal on late Monday, Tuesday, driving the price of grains down. And then he goes and blasts into the port of Novorossiysk, taking out all their loaders here the other day, and I'll get to that in a second. And now he wants a peace deal. And this is at 9:30, okay? And then look what he does at 10:30. 10:30, Ukraine strikes one of the largest refineries in the Urals, a 200,000 barrel per day unit refinery. That's pretty big. I don't know if Putin's going to want to talk to this guy or talk about any civilian structures being left alone. I think he wants to take out Odessa because of what he did to his big port. And so now we're going to go take a look at what we have here. You've seen me do this map before. Okay, the Sea of Azov, pretty much all the ports are offline because the Kerch Bridge, effectively, it's closed. And now, hitting that port of Novorossiysk, this one right here, there are 3 major loaders there. And they had said, basically yesterday, 2 of them were taken out. And now even a 3rd one, as of today, has been suspended. And that's the largest of them. So the only one left running is Tupsi. I get this wrong. I know the guys are laughing at me. Tupsi, I believe is how they say it. And that is actually not a large port. It's one of their smallest ones. So if these don't get back online, what good is Putin to grant stopping hitting civilian ports if he can't go launch something back at Odessa and knock him out if they've been taken offline? This is serious. This Black Sea stuff, this is getting very serious. And we are setting up for a wheat trade that is ready to take off, and we have a 60-day cycle. That's this little blue arrow here all over the place. You can see how it kind of comes in line with some change of trends. The working thought is things are going to start pinching up towards the end of the month, that wheat will bolt higher, and we will see the Chicago September contract going into delivery as a high. It'll get pinched into deliveries, and we'll see charts like the December Kansas City wheat contract hitting $8 or higher. On a note, the Chicago wheat 120-minute chart, this one's interesting as well. Despite all the chitter chatter, all the volatility, it held today, and the moving average isn't getting positive, like it wants to go up into the end of the week. All right, let's get to cattle. Well, earlier in the week, we had shown you that the cattle had stalled out at the 38% retracement, likely setting up an A wave. And then on the close of Tuesday, we said this was bad. And we said Tuesday that we're probably set for a C leg down to complete an ABC pattern 3-wave for a B. And it could be as deep as a 786 down towards 219 range. Today's exact low was 219 before a mild bounce into the close. That needs to hold. You have this V bottom, and then you have this hard B wave down that should lead to recovery. Now, we've been discussing that this may not be the October contract. This could be just a lot of noise and chart and time burned up as we work our way probably back to something that'll become the December contract that works its way back up into the 230 to 235 range, which is where the cash trade, it's 32 today. It was 35 last week. It probably come off the August contract, believes it's coming off to 230 or less in the end of the month. And then the October contract tries to work its way back up here. So it all falls on the reality that we cannot be closing below, much below 219. If that happens, then we do have a wave 1 on our way down, wave 2, and then a wave 3 later on next year. But we think we have time for a recovery bounce on the board, possible December contract here to the 235 range. So now let's go to feeder cattle. Feeder cattle, here too we warned just like on the cattle market. We have our head and right shoulder top, and that A wave bounce up here, well, it could do a possible 3-wave correction down to the 234 range. We had said worst case scenario. We've been putting that in the morning text every day here saying, if they break out through 38, she's going to 34. It literally took about, 10 minutes once it took out 37.5 to get to 34. Now, it did recover nicely into the close, but what it needs is a decent day tomorrow to justify that we are correct, that a wave 1 low is in. We're working an A, B, C 2-wave recovery. If the September were to take off, it could burst through this moving average and get to about the 354 range. We've been kind of thinking it was a moving target here before she really fell out of bed. If it could have held here a little better, we'd be more optimistic. But now the hope is just to get back to 48, and there's your wave 2, which is a ABC recovery. Now, October is going to come on this chart in about 10 days, and so if we don't get September through here pretty quick, it may edge on through to the 350 area. And then you're going to have October stalling out probably in the 345, 348 range because it's running an $8 discount now. And then this break on the continuation chart in wave 3 is a self-fulfilling prophecy because every contract's carrying a sharp discount into the January contract. Now notice that this break here also was a 3-wave, A, B, C, which is consistent with the prospect of a bounce coming. But if you go look at the January feeder cattle contract, you've got a 1, 2, 3, 4, 5-wave decline. 5 waves. Of course, this 4th wave didn't stay below this leg, but we could subdivide. The point is multiple waves down, which makes January anticipating a lot of port of entries open by the time we get there. Possibly it'll be a total 3 of them working after August 24th works out in Douglas, Arizona. That works out pretty good over a week or two. They'll start adding other ports, likely into Texas. That the feeder cattle January contract may struggle to get back above 325. You could just see this was support, is now resistance. And that would be your target for recovery bounce for another marketing sale. Dreaming about this, I know there are universities out there saying new highs coming, cattle numbers are tight. Yeah, I know all about that. I know about the sale barn guys, the online guys saying never a better time to buy. Reality is exports are on the decrease, imports continue on the increase, and to top it off, consumer demand is cracking out there. It is. And the higher end restaurants are reporting it, earnings are coming down. And so it's just kind of a self-fulfilling prophecy that highs have been put in for the cattle market. 360 is the high water mark. This winter, if we have bad weather, January, February, yeah, maybe we do get back up into the 350 range on the cash trade. But for now, things are at a impasse. The aging bull market is now become a new budding bear market. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.